one, came up from the mud. They said I'd never be none. They said I'd never be rich. They said I'd never be anything. I told them, get off my dick. Get away from me.
Alrighty, what's going on, guys? Edward here, back with another video. Thank you so much for being here again. And in this episode, I want to talk about structure mapping. This is based on smart money concepts. And I'm going to try to make it as simple as I can make it so that you guys can understand, okay, how this works. And because it's quite confusing if you don't know what you're looking for. And a lot of people normally fails into this. I'm doing this video also because I'm getting some requests on my YouTube channel about this, and you guys wanted to see it. So I am going to go ahead and explain it the way I see it, the way I use it, and the way I understand it better. Okay, so structure mapping. Understanding that the markets, of course, they move certain ways, right? It's either trending up, trending down, ranging markets, right? We want to try to avoid ranging markets, okay? These are the markets that we normally want to take. But how do we know when a market is actually trending up, trending down? Well, we're going to focus. I'm going to show you a lot of examples. This video is going to be a little longer. So as a matter of fact, I want you guys to save this video, have it somewhere safe, and you can watch it whenever you get confused again. You know, it's always good to come back to some videos and rewatch them again. So just whenever you're lost. So let's suppose right here, this is very simple, structure mapping. Let's suppose we have a trend right here, right? And if you look at it, at this trend, this swing highs and swing lows, okay? Every time the price breaks an old high, anything, and let me put it this way, anything that happens between this low and this high, supposing that, I don't know, that's probably the market is coming from here, right? Something like that. So anything that happens between this swing low and this swing high, anything that happens in between right here is internal structure. Okay, anything that happened in between this range, we're going to call it, this is a range. Okay, what price did after this price, price created this high, broke, right? So we are in this range. We use the Fibonacci, understanding, very important, where is the middle point, where's the midpoint in between this whole swing move, right? From the low to the high, we use the Fibonacci. Where's the 50%? 50%, it's around right here. So we understand that we want to be trading from discount. If you want to buy, you want to buy from discount. If you want to sell, you sell from premium. Okay, this is very important. If you don't understand premium and discount, I'm going to include a playlist right here in the top right corner. That's based on smart money concepts and everything that involves smart money concepts and ICT, so premium and discount. All right, so ideally you want to be buying when price is at discount. So you wait for price to be somewhere in discount, and it's your job to be looking for a buy right here. Okay, so you can target that previous high. So again, anything that happens between this range from this low to this high, anything is internal structure. The price could be playing here for days. So this is all internal structure. And technically speaking, we're still bullish. We're not going to be bearish until at least this low gets broken. Okay, this low is the one that's going to mark up my change of character. Okay, so price could, remember, in between this range, price could be playing here and drop, and probably getting right here, right? You might think, oh, we're bearish now, we're breaking this structure. No, you're not understanding. Where is the lowest point, like the lowest point before the break? Okay, where's the lowest point? Right here. Where's the highest point so far? Right here. So anything that happens inside this range, we're still bullish. The idea, of course, is somewhere here, be looking for buys and eventually taking this high. It can take sometimes little while. Sometimes it's just very quick, right? So let me go back here. So you see, price broke, pulled back to discount, broke again. So we created another range. We have this range now. Anything that happens between this high and this low is internal structure. Okay. Ideally, we want to wait for a price to come back to 50% using the Fibonacci from the low to the high, right? And you're at 50% discount. So you look for buys right here, targeting this old high. Okay. And the same thing repeats over and over. Okay. Price creates this low, breaks again, creates a new high, a new swing high, right? So where's the lowest point before the break? This is the lowest point before the break. And this is the highest point so far. So we have another range, right? Anything that happens in between this range, right? So when am I going to be bearish? Well, if price would have actually, instead of breaking to the upside, it would have done actually something like this, then we are probably having a chalk, okay? A change of character, what is called a change of character, a change of direction, structure shift. I mean, yeah, many names, right? Unless price is just sweeping, taking liquidity, and it pulls back up very strong and it goes back up. That is called inducement, right? Liquidity sweep, liquidity grab, whatever you want to call it right there, that also happens, okay? Fake chalks as well, they call it fake chalks. But in overall, it's a liquidity sweep. It's a fake move. It's a manipulation, right? Price is taking a previous low, okay? And then it will actually go to the high again, that old swing high. So I hope it makes sense. But the idea for this analogy, for this example right here, is that you guys want to be waiting. If you have a break of a structure, let's say on 4 hour, you recently have a break of a structure of an old high, right? Use your Fibonacci from the low to the high, right? 50% discount. Try to set alerts. Set alerts right here and just do something else. Just wait for price to be in position. So you will be looking for buys somewhere here. If you want to become more disciplined, strictly disciplined, right? You can just wait for price to be at discount and then look for buys. Now, let me just go ahead now and jump into the charts to show you some examples, right, in real life. Boom. Welcome to real life, right? So this is a currency pair. This is AUD CAD, and this is real life, right? Sometimes this is why you have so many pairs. We have so many pairs, indices, cryptos, right? That you can pick from. You can choose from the best ones. Sometimes market conditions are going to be very choppy, very indecisive, but in overall, is almost like, of course, you're going to have days where you're going to have a lot much better structure. Like for example, this little trend right here, right? But technically, is it's almost the same, right? Let's probably let's clean all this. Let's go probably to the daily and see if we can find some right here. Let's go from top to bottom, right? Yeah, let's try to make this structure up here. So let's start probably from this high, right? The highest point. At a move, correction, move. So pay attention to what is happening, right? We have an impulse, right here. Price creates a low and then pulls back. This highest point and the lowest point right here, this is my range, right? Once the price creates the low, price pulls back to where? Discount. It pulls back to discount and from here sold off, right? Now it created a new low, a new swing low, and we have our highest point. So this is my swing high, swing low. Anything that happens in between, it's my range. I'm in between this range, right? Price pushes up, sort of reaches 50%, in this case premium, right? We're trying to sell from premium. Price pushes up, taps premium, and then we have that break, right, to the downside. So you see, you can see it. Let me see if I can actually go closer and I can show you examples how it looks in lower time frame. So yeah, probably let's go to 4 hour. I think it's going to be better. Let's suppose we're right here. I think I can actually go back in time here. So Yeah, let's try to stay probably here, and let's try to see this move to the downside. Right, again, we have an impulse, right? This recent impulse, price creates a low. This is my highest point. Price pulls back. Let's see if we can actually mark it up this way. I think it's going to be better. So price breaks right there. Price creates the low. You can use the fib, right? Go OTE. All right. So let's see if price actually is going to pull back to discount. Yep, it did actually tap at least right here. It did tap premium. I'm sorry. So I'm using Fibonacci to identify the middle point, the 50% of this whole impulse. So price tap in, I'm expecting price to go where? Towards this low, right? Price goes towards that low. Now, once price breaks, where is the highest point before the break? This is the highest point before the break. So far, this is the lowest point, right? Now, we're going to just do the same thing, right? We're going to use the fib from the high to this low. And we see the price is actually tapping in. Okay, the idea here is that we want to continue with the structure mapping. We want to continue with the sales, right? The idea here is to be looking for a sell somewhere above 50%. So price does that, taps into the premium zone and breaks to the downside again. So again, this thing moves. We move now. This so far, let's see if this is the lowest point. At this point, we created this new high, lower high, I'm sorry, and this is the lowest point so far. Let's see if it's going to continue. Looks like it did continue. Let's see when it's going to be returning. Right there. Okay, we probably are going to mark it up again. Right there. This is my highest point, my lowest point. We are in the middle of the range, okay? Don't forget the lines. We are in the middle of the range that we just created, right? After this recent boss break of structure, right? Price is going into, in this case, into premium, right? So we should be looking for sales. Boom, price broke again. So you see what is happening, right? We're moving, trying to do this as simple. I don't want to make too many drawings. I just want to make this as simple as I can make it. Of course, price now created, this is the highest point before the break. See, if it's going to reverse from here, price is reversing. Probably we were in between this, again, this range. Price pulling back to where? Use the Fibonacci from a high to the low. Price is a discount. Let's see, and the premium, I'm sorry. Let's see if it's going to drop. Boom, it drops again. So that means that now we have a new confirmed lower high. And this is my lowest point now. Again, I'm going to move my Fibonacci from the low. And we do that until we, at some point, this high, one of these highs is going to be broken. At some point, it's going to be broken. Or if it's not broken, at least we're going to see probably an inducement, right? Probably the price going to try to break, or a fake shock or inducement, right? And then price may actually continue dropping again. But we don't know until it happens. So now we have another range. Now we just created this other range, right? We are in the middle of this range. Let's see if we want to continue selling. We look for sales right there until, let's see if we actually hit this low. Aha, there we go. We see price is not going towards the low. We were predicting the price to simply continue dropping. And this is the first time we're seeing that sweep. Now, is it a fake move? I mean, whenever we see just a week like that, yeah, probably is a fake move. It's just an inducement, right? And price from there may actually go to the downside. If you don't want to be trading this type of formations, if you feel that, there's just faking out, stay out. Better stay out, right? Let's see what's going to happen right there. Okay. It looks like it's actually breaking. So we might be shifting the structure. Okay. As a matter of fact, it was not a fake out or an inducement. I mean, it did try to break first, but at the end, it did end up actually breaking. So let's try to measure now and see what is happening right here, because we had this range, right? We were bearish, but now I was expecting this move, right, to continue to the downside. But now we have a break of that structure to the upside. right? So we're going to try to measure now and see where is the lowest point. Where is the lowest point before the break? The lowest point, where is it? The lowest point is, of course, this last low, that confirmed low, right? This is the lowest point. So far, this is the lowest point, and this is the highest point. So you can use now the Fibonacci, of course, from now in this case, from the low to the high, and you want to wait for price to pull back at discount. In this case, if you want to buy, right? Let's see if we actually get the price to be pulling back to discount. Okay, we are tapping into discount right now. If it's tapping into discount, it means that from here you could be buying, and we're expecting now price to go from this low to this new high. Now this is the formation. Price was doing this, and now we broke. So we're coming back, tapping in discount. We are in this range, going back to discount, premium, right? We're buying now. We were selling first, and now we're shifting, apparently, after this chalk right there, right? That change of character. So let's see if price is actually going to continue pushing up, or is it going to drop deeper? But I'm expecting, in this case, this high to be taken, okay? Because I'm in the middle of this range again, right? 50% is right here. So let's see, what do we have? Boom, we have a break, okay? So at this point, again, clean it. Where's the lowest point before the break? Let's see, is it double bottom? I think this is the lowest point before the break. So far, this is what we have. Now we're shifting, right? Now we're going to use the fib from the high to the low, and we're going to continue repeating this thing over and over again. So far, let's see if we start pulling back. We do have a break of a structure, boss, whatever you want to call it. At this point, price is not pulling back just yet. Let's see if it actually pulls back. Sorry if I'm making it a little fast, but hope it makes sense. Right there, price pulling back. Now I'm expecting what? I'm expecting this highs to be taken, right? We are in the range. We are in the 50% of the range. We are price just tapping discount. Now my job here is to find a buy to target this high. So let's see if it's going to continue. Right now, remember, I have shifted to bullish. I'm not going to be looking for sales anymore. I'm looking for buys only. The only way I'm looking for sales is then I need price to then break this, right? That's going to cause my chalk, my change of character. So let's see what we have there. Still ranging. You see, we are ranging. We're literally ranging. We're still inside this range. Anything that happens right here is internal structure. It means that if I go lower time frame, like 15 minute, I'm going to show more examples in lower time frame. Don't worry. I'm just going fast right now just to show you the first step. Okay, like the first view on here. So you see, we're still in the middle of the range. How do we know? Are we still bullish or bearish? We're still bullish. From here, we're still bullish up until if we have a failure right here, right? Or if we have an inducement, as I mentioned, price may actually push, we have an inducement right here, right? Or a fake chart. That can happen, especially with news. So let's see. Okay, looks like what we're having right here. Apparently, it tried to break below. So far, this could be an inducement. Price is retracing back up, very strong, closing above. This is probably a chalk. This is probably a fake chalk. Let's see if it's going to break to the downside or go up. You see what is happening right there? Boom, it went all the way to the top now. So this was an inducement, okay? You have that manipulation. Price went down, faking everybody out, trying to induce people even to continue selling. But nope, we were still strongly bullish. So I hope it makes sense. I'm going to continue doing this right here to just show you. I know the drawings probably doesn't look good, but this is just a raw idea of structure mapping, okay? And I'm doing this in one single time frame. I'm going to go deeper now in lower time frame, just finding more examples. Okay, so now let's work our way from here up until this point. Okay, it's going to work our way from here, going from here. All right, just remembering the structure that I was marking up in this time frame. Okay, that every time the price from the high to the low, we are in the middle of a range using the Fibonacci, right? To sell from premium, price drop, again, creates a new low, and this is my new high, lower high, right? It creates another range. Again, we're going to be selling from premium. Price pulls back to premium and then sells off again, right? So creates another lower high and another lower low. And we have another range. So from that range, we use 50%. And again, we're going to be selling from premium, waiting for price to be at premium and selling. But yeah, I know what you're saying. Oh, okay. But now that I know that I'm in premium, if the price is in premium, how do I enter? How do I know when to enter? Well, that's what I'm going to explain now. So don't panic. Let's go here. Let's go here. I'm on H4. I'm going to try to go lower time frame now. My job is to find within these points. I want to find the reason, because there is a reason why price dropped from here, from premium, right? Remember, we are in this range. I'm going to be marking up better lines, I promise. Right now, it just looks very ugly right here. So yeah, let's put it this way, and right here. So this range, in between this range, from this high to this low, right? After this impulse, how do I know it's a range? Well, because we recently broke, right? We have a break of a structure as well there. I think I'm gonna put it this way. So like that. All right. So we just broke. We are right here. We just broke this structure. How do I know? Okay, I understand that if I draw my Fibonacci from here to here, okay, I understand that I have to wait for the price to be and in the premium, right? At premium. But how do I know where to take? Where's my entry? How do I take an entry? Well, this case, since this is based on SMC, smart money concepts, our job is to find POIs within only this area, in this high, within this high and the 50%. Okay, you're gonna try to avoid spotting any any POI within this area right here, below 50, right? Because we're trying to just take positions from discount. Okay, understanding that, you know that you're gonna be avoiding take positions from here, right? Okay, so that makes sense, right? At this point, what we can have, well, I see we have a potential, probably a POI right here, supply, right? Price actually before a drop, we have a big displacement right here to the downside. That POI is probably a good one as well, and we also have another one I'm seeing right here at the top. That's another POI, right? Now, all we have to do is wait for price to get into those zones, and I could be selling already from here if I wanted to. You know, ideally, is go lower time frame and find a chunk, right? A change of character. You want to, since markets are fractals, what you want to find inside right here, you're going to find a smaller structure as well. Now, we're going to find a little bullish structure, right, momentarily in lower time frame, and eventually it's going to go bearish again, right? It's going to be fully aligned. So let's see if we happen to have a change of character in this area. So I'm seeing price is trying to push up right here. So I'm going to mark up this is my high, and right here this would be my chalk. Okay, are we breaking below? No, right? We just broke another high. So it means this POI is not working. Did not work, right? So far my chalk would be probably somewhere here, right? Let's see what's going to happen. It's going, looks like it was going for the next POI, understanding also the liquidity concepts, okay? This is very important. Yeah, it actually dropped there, but this is very important, the liquidity concepts, because these highs, this actual previous highs, these are liquidity zones, okay? And I like also when there are fair value gaps. Fair value gaps are very strong when it comes to smart money concepts, especially also ICT concepts, right here. And you see that the price is actually tapping into this fair value gap and it's sort of reacting already. Okay, so I'm sure that probably if we go lower time frame, maybe 5 minute, 1 minute, we might have a better entry right here. But since price is already reacting, I can either wait for price to tap the POI, or if the price is tapping my fair value gap, right, and sweeping liquidity right here, just taking this highs out, I can just simply wait from that point. I'll wait for my chart, change the character, right? Let's see, we happen to have a break. We do have a break now, right? Candle close below, good. So this is a potential chalk, right? And now, where do we enter? Okay, this is a technique, well, pretty much from ICT. But this right here, these two candles closing bearish, I mean, these two bearish candles after the push, that's an order block, okay? And that order block just got broken. That turns into a breaker block, okay? I know probably you guys are hearing this, you might be thinking, what the hell is he doing? Yeah, you can combine ICT with smart money concepts. Basically the same thing. So you could be looking for a sell position anywhere in this area. If you wanted to enter, probably tap in the entry right there. And then your take profit, your stop loss, probably above that old high. Your stop loss, pardon, I'm sorry, your stop loss above that high. Take profit right here, or like this, you could use the Fibonacci from the high to the low of that last move right there. And you go into the settings called projections. Let me know in the description below if you knew about this already, if you knew about these settings. If you don't know, basically these are the settings for the Fibonacci that you can use. You can take a screenshot right here. Okay. But this is basically it. Now I'm waiting for price normally to reach this target, at least between 2 and 2.5 on the standard deviation projection using the Fibonacci. So let's see if we actually can get to target, and this if our entry gets activated or not. It did get tapped in, playing around, but eventually it's a little slow. Eventually we're targeting. There we go. Eventually we hit the TP. Okay. So again, what the price is doing, we are displacing to the downside. We're now breaking. Okay. You see what I'm doing? Let me clean this now for a second. We have now this new impulse, right? We have a new range now from this high to this low. Well, so far we don't know if it's going to start pulling back just there yet, of course. See, okay, looks like it's pulling back, right? Now, again, we use the Fibonacci from the high, just understanding, right? This is going to be repeating over and over again. Use the Fibonacci. You want to be selling from here, okay? Now, my job is to find within this area, especially here between the 50 and the 100, I want to find an entry, okay? So let's go lower time frame again and see what we can find from here. I'm seeing already this big move right here. You see this big spike and then drop. This is probably our most prominent POI, right? Or supply zone that we can trade in. So we wait for price to do its thing. Let's see if it's actually going to get there. The idea here is you wait for price to tap. Once it's tapping, you go in lower time frame. All right. And in here, this is where you're going to be looking for your entries. Okay. Let's see if we happen to spot a good entry here on the 15 minutes. So far, this seems very, very choppy. This looks like it dropped after news. Let's see, 5 minute, 1 minute, 5 minute time frame. So on the 5 minute time frame, we have this last break right here to the upside. Now price displays Very strong movement to the downside, right? This is normally the chalk. If you look at the structure right here, you see we have an internal, little small, on a 5-minute time frame, we have a small internal structure right here. Price has been pushing up, pushing up, pulling back, and so on, right? Until it breaks the most recent low, okay? That break right there is my chalk. This is the um, last break of a structure to the upside, or sweep, or inducement, whatever you want to call it right there. But this is the one that I care about, because that closure below and leaving a fair value gap after the closure is a very high probability formation right now. It's telling me that it wants to sell off. We already know that it's tapping our higher time frame POI, right? So we do have, what do we have? We have a fair value gap right here. We have a breaker. This series of candles, normally, I see some people just normally marking up this one anyways, right? But the breaker would be pretty much all this. I don't care. You can mark it up like this. Your stop loss anyways will still have to go above that swing high. So if you're entering right here, let's say you're entering here, your stop loss here, your stop loss always goes above the swing high. Now, where do we target? You could use again the standard deviation projection settings with the fib from the high to the low. And we could be targeting somewhere in here, probably this recent lows. Or if you want to go, because you know that structure, right? You want to go all the way down here, that's up to you. If you want to be more greedy, right? So let's see anyways if we get tapped in or not. Because I think this day we had news. Yeah, it was a big crash. We actually had news. Price did not tap the actual order block right there, but it did tap the fair value gap that actually imbalanced right there, and did tap it and go. But we had news right there, 8:30. I think that was on Friday. So this was NFP. So big drop, and of course it melted down directly, as you saw it, directly to the TP right there. So hope it makes sense. I know I'm going a little bit fast, but this is kind of like the idea of this whole range thing. You guys have to understand that the structures, let me actually go here, and I'm going to try to go randomly now and pick a currency pair, whatever here. Just going to choose one, click. That's it. Now I'm going to see, I have already some setups in there, but let's see if we can go. Let's see. This is pretty bad, right? It looks pretty messed up, but let's try to mark it up. Let's play around. Let's play with this thing. We have from the highest point first. Oh, let's go from here, right? From all the way down here. From this low, this high. Well, price broke. Or shifting the structure. Hold on. I need to go lower. Yeah, right here. So let's say we are the lowest point, right? High. And then price pulls back, right? So from this entire push, we are in a range, okay? This is a range. From this impulse, we are in the middle of a range. Let's see where the price breaks. Price ended up breaking to the upside. Okay, good. Now, where is the lowest point? My lowest point is right here. Where's the highest point? Right here. So that means I have a new range from the low to the high. It means that because we did have a break of a structure, have a boss to the upside, it broke that previous high. It means we are bullish, right? So from the lowest point, you're going to use the fib from the low to the high and 50% discount, and you're going to wait. Your job is to wait for price to be at discount and to find an entry within this area. Sometimes you're going to have a really good setup. Sometimes it's going to be very messy, right? Very difficult, like it's most of the times, right? It's not, trading is not easy. You're going to have a lot of choppy markets all the time. So let's see if we actually happen to catch maybe a formation right here, and what sort of, let's say, formation we could have gotten. Let's say 1 hour. I don't know if I can go back down that far, but, or see some sort of POIs. Let's go back here. Yeah, this doesn't look actually very clean. It's very messy. This impulse right here, you see, this is what I mean by, you have a lot of pairs to choose. If you happen to find that within this low and this high, it's all crappy markets, you don't see a clear or clean POI, probably one could be this one, right? But it looks like price actually took that one out. Just made sure to sweep all this liquidity. And then after sweeping that liquidity, price went straight up. If we go in lower time frame, you see price actually took what's happening right here. Price took that liquidity, right? Swept what we're having here. That's the break of the structure. Boss to the downside. This is a chalk, or change in state of delivery, change of character, whatever you want to call it, is the same. Price pushes up, breaks. This is our change of direction, right? The price is telling you that I want to shift. I'm shifting the structure now from bearish to bullish after taking liquidity to the downside, right? Of course, that POI that we had, that potential POI, was a fake one, or it got manipulated. The price just induced. So we do have a little inducement right here. Where is it? Inducement. We had an inducement, and after the inducement, price displays back up. Of course, the formation probably would have been here in the lower time frame. After this break, this is an order block. So you could have taken probably the buy from here, placing an entry at the order block, the stop loss here, and then take profit going to the upside. Of course, we're trying to get in and hold our buy all the way to that swing high, okay, on higher time frame. That's the idea of this thing. See, this is a currency pair that is normally it's very choppy, tends to consolidate a lot. So I'm just picking up a random currency pair. You understand anyways what happened right there. Yeah. So this is kind of like the idea. And if you go, you see what I did that on H4, right? That's the structure on H4. If you keep going in lower time frame, you're going to find the same thing here over and over. This is all fractal. So if you see, for example, this move, right? So this recent impulse right there, if you go from the low to this high, you have a range. You use the fib from the low to the high, 50%, your discount, right? If I try to go, let me see if I can go. Can I go 5 minute? Oh, I can. Okay. If I go 5 minute right here, look at what happened. See what happened right here. And go back in higher time frame. So, okay, we're going to try to spot from this push and see if we have an actual POI. So right here, we have one. That's probably this zone right here. Let's see on the 5 minute time frame. Probably we can refine it a little bit. Yeah, I would say that this is the actual POI right here. That zone. So price comes into discount, taps, and eventually actually goes to the upside. It hits TP. So you see, why did it go there? Let's go back up on 15 minute. we're probably having another structure right here. Look at this price. When it broke this high, when it broke this recent, remember, since this is all fractal, markets repeats. They do everything again and again and again in all time frames. So we do have a break of a structure. Before the break of a structure, where's the lowest point? Right here, right? This is the lowest point. Where's the highest point? Right here. So again, you are in the middle of a range. From here to here, where did the price go? Went to discount. You see? And then from here, chop tops, a little sweep right here. I'm seeing a little inducement, and then price displaced up, right? Creating another internal little minor structure right there on top of the one we already have. See what I mean? So pretty much price went the discount. We went into discount right here, and then from there, price eventually went for the highs. Let's see. It went for the highs. You see? So now that we're breaking, it's just we continue, right? We continue. We just broke now. Let's do it here. We broke this, right? Now we just broke this one. Okay. Where is the lowest point? Where's the lowest point before the break? Right here. Lowest point is right here. Where's the highest point? Well, so far it's right there. I don't know if it's going to drop from there or continue. Let's see. Okay, it looks like it's trying to pull back. The real thing, the real pullback, of course, is it's going to happen if it reaches 50%. That's one we know. Other than that, probably it's not fully pulling back. It's just a minor something, but let's see if we pull back. You see, we're not pulling back just yet, so we continue stretching this thing. This is still one impulse. We're still in one impulse right there. See what happened to pull back from there? No pulling back. You see some impulse. Sometimes it does take more time to pull back. We are not getting an actual pullback just yet. That's when we're having it. So this means this is my highest point. Price is kind of pulling back now to discount. And let's see if we happen to find or get maybe a POI. Do we have something here? Probably the extreme right here, which is this order block. Let's see if we go towards here, tap and go. Well, let's see on the 1 hour. Probably this little POI as well. This little zone right here. Well, let's see. Let's see where price taps in. Did it go there? Oh, okay. Got a little deeper now. It's tapping into the order block on H4, right? The zone that I marked up is tapping in. Let's see if we can get an entry in lower time frame. See if we get some sort of push to the upside. Looks like we did close. I like that push. This push, you see, it's in lower time frame, we have a sweep. Well, we'll have a break of a structure to that low. Right here, the opening price is normally the order block that we just created. Let's see if we can go 5. Let's see, probably in 5 minutes, a bit clear. Yeah, it probably was actually here, but I think I would stick with the 15-minute. We need a pullback now because it looks like it may be gone, but we need a pullback. In order to enter, we probably need a pullback to somewhere here, and we could be catching a buy from there. Well, let's see if it's going to pull back or not. Oop, actually went down. See if we can stop us out. The spread probably would have got you out depending there. Would have got you out. And we're targeting these highs. Let's see if it's going to come back down. Sometimes even here you can get a re-entry after the sweep. The price creates a low and then it does a little fake move to the downside. That's another inducement. That's a little manipulation right there. So probably in lower time frame, you could have got maybe a buy formation. Yeah, look at this. Hold on. Look at this. The entry could have been in this sweep and this displacement to the upside. This was a good move. Got a sweep. You see this last move to the downside, this last break right here, price, then after that last break, price pushes back up. That's a chalk, right? We're having a chalk or a change in state of delivery, auto block right here. We do have even a fair value gap, which is cool, right? Breaker block. We have a bunch of confluences right there. So you could have entered right here and your stop loss below this low. And again, targeting, we're going to be targeting that swing high. That's the cool thing about smart money concepts, because if you look in this type of a structure, you're normally targeting the swing points. You enter in discount or premium, right, in lower time frame, and you aim the highs, for them for those swing highs. That's where you aim for. So let's see if we actually continue. Nice move. You see? So it repeats over. Now we're going to repeat it over again right here. See, I'm actually going to continue and repeat it again. Sometimes the structures are not going to be clean, guys. They're not going to be clean. Okay? That's the reality. It's not going to be clean. But you see now, we just created the, where's the lowest point before the break? We have a confirm right here. Break of a structure, right? We have another boss. We know we're still bullish. We continue bullish, but now we have this lowest point before the break. Okay, it's not this one. It's not this one. It's not this one. It's not this one. It's this one. Okay, because this is new range. We're creating a new range. Now we wait for price to start pulling back. Let's see if it's pulling back. Okay, we might actually have that high right there. We use the fib from the low to the high, and we simply wait for price to pull back somewhere in discount. If it's not pulling back just yet, it means that we're still in the push. Price is still pushing up. It means that we still don't have a confirmed high. Still pushing. We're still pushing up. Let's see. Still pushing up. You see, there is no pullback yet, or at least in this structure, this to me is more like still a continuation. We still have no pullback. Let me go in higher time frame so I can accelerate this thing a little bit more. Now, this is strongly bullish. This is still a very strong push. See, we already got to another point right here. So hold on, because I think we're having that. This is the pullback. You see now price. You see what I was doing, right? Until price doesn't reach the 50%, for me, for the structure, that doesn't count as a pullback. It has to, the pullback for this structure mapping, it has to reach the 50% at least, right? So now our job there is to find again another POI. Probably we have liquidity below these lows that's going to be taken, or we can go all the way down here to the origin. Let's see what happens. Price induce. Look at this manipulation, right? Inducement, fake chalk. Probably it's a fake chalk. It's just an inducement, and then maybe price is gonna go back up. We don't know. Let's see if it's actually a real chalk or it was just an inducement. We're still in this middle of the weird move that just happened. Let's see if we break to the downside. Okay, hold on. Are we breaking? Well, it's trying to break. Still trying to break this actual low. Probably we're going to go bearish now from here. Let's see. No, sweeping. Yeah. At this point, you might take it. At this point, now price has shifted. Probably, or is the continuation of that inducement that we have right here. See, it's acting weird, right? And this is where you could be getting confused. If you see things like this, just don't trade it. Look for another pair, right? Now what's happening? You see this low, created high, now we're creating another low. So we're probably in a new range now, bearish. We're probably shifting now structure. Let's see, I'm going to use my Fibonacci from now the highest point to this lowest point, and see if we go, we are tapping discount, premium. Let's see if it's going to go back up or it's going to respect and go back down. Right now, it's very, you see, it's moving sideways, starting to go choppy. This is normal. This is going to happen. This is where you're going to be lost and you're going to be like, what the heck is going on here? It's not respecting lows. Yes, that is going to happen. It's not going to be respecting anything. Right, boom, price is actually pushing back up. So right here, you probably got faked out thinking that, yeah, that we actually have a chalk now, change your character. Price is probably changing the direction. And in reality, it was all inducement. This was all manipulation. This was an inducement. This was all trap. This was all an inducement. Price was inducing people to go selling. Probably we were having news or something these days, but this is an inducement. Price ended up breaking the structure to the upside again, one more time. And so we continue. Right? Where's the lowest point now? Lowest point is right here. Right? Before the break of the structure, where's the lowest point? Right here. And we continue. We can continue higher time frames, lower time frames. It's all fractal. Markets are fractal, so they're going to be repeating over and over again. Okay, so very important. Again, I'm going to mark it up here on the line. So this time I'm going to do it this way: impulse, correction, impulse, correction, impulse, correction, impulse. In the perfect world, well, there are days where you're going to actually have beautiful formations like that, right? But you have to understand then, after a swing point, after an impulse, and the price starts correcting, pulls back to discount, you know you are in the middle of a range. So anything that happens in here is all internal structure. The idea is to be looking in lower time frame and entry right here to target the next high. Of course, we're seeing the price probably already coming from a high breaking. So price recently broken a structure. Okay, where's the lowest point? Right here. Where's the highest point? Right here. I'm going to use the fib. Again, this is a range. Price pulls back to discount and we look for another buy. After the break, where's the lowest point? Right here. Where's the highest point? Right here. Again, we are in the middle of another range. And so on. We continue bullish. This way we maintain looking for bullish trades, or in this case, yes, we're looking for buys, right? We wait for price to get into discount and buy. There's another thing that you can do is probably, let's say you're watching this in a 1 hour or 4 hour time frame. You could probably go a lower time frame right here and try to anticipate the beginning of the pullback by going a lower time frame and just seeing the structure, right? Seeing the structure, the price is shifting. You know, this price is pushing up like this, and then all of a sudden you have a big displacement to the downside, which is a chalk. Price pulling back to premium and then dropping. This, if you spot this somewhere here, right, but lower time frame, this is H4. This is supposing that this is H4. This is a 4 hour, right? And then you go down to 15-minute. This is how it's going to be looking. This is how it looks right here. This trend is on H4, but when you zoom in right here, this is probably how it looks. And where are you going to be entering? You could be entering once the chalk happens. You could be entering somewhere here, stop loss above that high, and then take profit going lower. Going where? If you're entering right here in that 15-minute time frame, you could be targeting the 50% of the Fibonacci. Like if you're entering right there, you could be targeting the 50% because that's where you want the price to go, right, in order to buy. It's a risky thing to do, of course, because you're going against the trend. It doesn't mean that you cannot do it. Yes, you can do it, but you're going against the trend. So ideally, you want to wait until price is a discount. So you're fully aligned, you're fully aligned with the bullish trend, right? With the bullish order flow, and then you look for the buys right here and targeting those highs. So normally these buys are going to be more juicy. You're going to be able to have better risk to rewards, right? And it's more probable. They're more probable than just looking for the sell right here, trying to anticipate. You're trying to anticipate the beginning of the pullback. That's an early sign, so there's more risk. Okay, but if you have everything fully aligned, you're a discount, you spotted a good POI, a good supply or demand or fair value gap right there. You're seeing the manipulation happening. There's a lot of things right here, a lot of confluences that you can find in order to get in. But this is basically the best way, guys. I'm gonna make probably a couple of more videos regarding this. Let me know what you think, if you want to continue watching this series on structure mapping, and leave your comments below. If you want to continue watching this, you want me to continue making more videos, let me know. I'll see you guys in the next one. Take it easy.